Wall Street. It is not just a street in New York City. It is the name the world gave to the center of American finance, a place where banks, brokerages, and investment firms built the machinery that moves money across the entire global economy. For over a century, Wall Street has been the symbol of financial power. The big names, Goldman Sachs, Morgan Stanley, JPMorgan, operate here. They raise money for companies, advise on mergers, manage assets for institutions and governments, and trade securities on a massive scale. Wall Street made itself known through its culture as much as its work. Suits, long hours, client dinners, and a hierarchy built on titles and tenure. It attracted people who wanted prestige, connection, and a seat at the table of traditional capitalism. Jane Street. It is a trading firm based in New York, founded in 2000, and for most of its existence, almost invisible to the general public. Jane Street does not manage your retirement fund. It does not take companies public or advise on billion-dollar mergers. What it does is trade, constantly, precisely, and at extraordinary scale. It is classified as a quantitative trading firm and a market maker, meaning it uses mathematical models, data, and technology to buy and sell financial instruments across markets all over the world. For years, most people outside of finance had never heard of it. That quiet profile was, in many ways, intentional. Investment banking. This is the business that defines Wall Street in the public imagination. Investment banks sit between companies that need capital and investors who have it. When a company wants to go public, it calls an investment bank. When two corporations want to merge, investment bankers run the process. The revenue comes from fees, underwriting deals, and advisory work. Relationships matter enormously in this world. A senior banker who has spent 20 years building trust with a CEO is a valuable asset. The job is part finance, part salesmanship, and part politics. Analysts and associates work brutal hours in the early years, building models and presentations in hopes of eventually moving up to roles where the real money is made. Market making. This is the core of what Jane Street does, and it works very differently. A market maker provides liquidity to financial markets by standing ready to buy and sell assets at any moment. When someone wants to trade a stock, an ETF, or a bond, a market maker is often on the other side of that transaction. Jane Street does this across thousands of instruments simultaneously. The profit comes from the spread, the tiny difference between the price at which they buy and the price at which they sell, multiplied across an enormous number of trades. There are no clients to wine and dine, no pitch decks, no deals to close. The edge comes entirely from building better models and faster systems than everyone else. The culture gap. Wall Street firms build cultures around hierarchy and social capital. Who you know, where you went to school, how you carry yourself in a room. These things have historically shaped careers on Wall Street. Jane Street built something closer to a research environment. The internal culture rewards intellectual curiosity, rigorous thinking, and the ability to work through hard problems with teammates. Employees describe it as collaborative in a way that is unusual for a firm handling that much money. There are no formal titles in the traditional sense. The emphasis is on the quality of your thinking, not your years of service or your ability to manage up. The hiring filter. Wall Street, particularly at the analyst level, has long recruited heavily from a small group of target universities and prized candidates who could navigate case interviews, networking events, and multi-round processes that tested polish as much as ability. Jane Street hires differently. The process is closer to a competitive math or logic examination. Candidates are often given probability puzzles, trading games, and reasoning problems. The firm actively recruits people who have competed in mathematics Olympiads, studied logic-heavy fields, or demonstrated the kind of structured thinking that transfers directly to trading decisions. A perfect GPA from a non-target school can get you further at Jane Street than a smooth personality from an Ivy League campus. The pay structure. Both worlds pay extremely well, but the shape of that compensation differs. Wall Street compensation at the junior level is structured. Base salary salary, year-end bonus, and a career ladder that defines roughly what each level earns. At the top, managing directors and partners can earn enormous sums, but the climb takes years. Jane Street is known for paying very high compensation relatively early, particularly for traders and researchers who generate clear results. Because the firm is private and does not publicize its financials in the way public banks do, exact numbers are rarely confirmed. What is well documented is that Jane Street has become one of the most profitable firms per employee in the financial world, and that wealth is shared with the people producing it. The public footprint. Goldman Sachs appears in headlines. Its alumni run central banks and treasury departments. Wall Street firms lobby governments, sponsor events, and operate in plain public view. Jane Street has operated for most of its history without a public profile that matched its actual size and influence. It does not seek media coverage. Its leadership rarely speaks publicly. For a long time, it was almost a secret among finance insiders and competitive math students. That changed somewhat in recent years as its trading volumes grew large enough that regulators, journalists, and the broader financial world began paying closer attention. By some measures, Jane Street is now among the largest traders of ETFs and fixed income products in the world. The risk philosophy. Wall Street banks carry risk in complex ways through loans, trading positions, client exposure, and leverage. Regulators watch them closely because their failure can ripple through the entire economy, as the 2008 financial crisis demonstrated. Jane Street manages risk through a different lens. Because the firm is not a bank, it does not carry the same systemic obligations. Its risk is primarily market risk, the possibility that its models are wrong or that markets move in ways it did not anticipate. The firm invests heavily in stress testing its positions and limiting exposure in ways that protect the firm itself. The discipline is internal, mathematical, and constant. The influence. Wall Street shaped how the world thinks about finance, capital, and economic power for the better part of the 20th century. Its firms financed railroads, wars, tech booms, and everything in between. Jane Street represents something newer, a model where the advantage comes entirely from intelligence, speed, and precision, rather than from relationships or institutional legacy. Both sit at the center of how money moves. One built its dominance over a century through deal-making and political access. The other built its dominance in 25 years through code and probability. They are not competitors in the traditional sense. They operate in different parts of the financial system, but together they show just how wide the definition of financial power has become. That's all for today. Thank you for watching.